As Singapore's non-oil domestic exports and NODX are off to a good start in January, rising 12.8% on year. That is the highest since June. The non-electronic sector helped in boosting those exports, but growth also came from a low base compared to last year.
Singapore's non-oil domestic exports are carrying the momentum heading into the new year. January saw the second straight month of growth following December's 6.8% increase. The electronic and non-electronic sectors providing much of the boost, with bumper exports in specialized machinery and non-monetary gold. Semiconductor exports also remain strong.
Given the strong demand for electronics products globally because of the work-from-home trends, studying at home trends continuing into this year. Even on the non-electronic side, the major driver was specialized machinery, which was attributed to higher demand for chips, meaning that it's probably chip-related machinery.
Overall, exports to Singapore's top markets grew on year, but shipments to the European Union, the US and Japan dropped. Exports to the region also helped to prop up January's NODX. Markets like South Korea, Thailand and Hong Kong saw around 50% increase in exports. And one economist expects China to be a factor in the coming months.
Chinese economy has rebounded very strongly. They're pretty much back to pre-COVID trend rates. And internal demand in China remains very strong, especially as the Chinese government is seeking to try and promote domestic consumption.
Singapore's full-year NODX grew by 4.3% last year, reversing a 9.2% decline in 2019. Analysts are expecting to see growth this year.
Growth will continue to be quite robust, given that base effects are still favorable for the first quarter. But we do expect the pace to soften in the second quarter, especially for electronic side, given that last year in the second quarter, electronics exports began to outperform, given the stockpiling of chips in China, as well as some supply constraints.
Despite the rosy trajectory, the government is maintaining its annual forecast for NODX set between 0 and 2%, citing economic uncertainties and uneven recovery.